Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, February 28th, and we're kind of close to the bell here, so kind of late in the day here. So we do got a lot of, actually, a couple economic news releases that are actually very important today, and we're going to start off with the weekly jobless claims. Last week we had 366,000 people applying for unemployment, which was actually reported initially lower, and it was actually revised higher, and they kind of figured it would still remain in that forecast would remain in the 360 range, and actually this week's it came down to 344. So good numbers there, but it's not as good as people originally thought, because last week we thought we had a lower number and it was revised higher. Now we also have the GDP revision. We have one more revision. There's three revisions. This is for the fourth quarter. And the last one, last month, they were reporting it like a negative 0.1%. They were forecasting a bit higher at a 0.5%, and it only came up a measly up 0.1%. So not a good number there. And we get the final revision next month in March for the fourth quarter. And last but not least, we got the Chicago PMI for the month of February, and what that is, it's the manufacturing for the Chicago region. We had a 55.6, which is a decent number. It was anything above 50 is showing expansion, and anything below 50 is basically a contraction. And we figured it would come down a little bit to about 54, and actually went up a little bit to 56.8. So we've got some good numbers coming out of Chicago in the manufacturing region. So let's kind of jump over to the headline news, and basically item we have here is the stock market ended up closing down. It's about so it's after the bell rang in the stock market. Bond market has another hour to go. After pretty much all day, it was up, and then also last moment it went downwards. So it closed downwards. So on that note, let's go ahead and take a look at the bond market. And we started the day up higher. We even higher than where we left off yesterday. So as you can see, it was at 103.38 as we had that decline yesterday. And we started off the day at 103.47. So we're up about 3 basis points at the 103.50 range. So a decent number right there. Again, we're still at the kind of testing that ceiling right there. It's going to be a difficult ceiling. It won't be easy to get above that. And a lot of forecasts out there are basically saying that they think we're going to see a little bit worsening before we see something better. Long term, they think we'll have better rates. There's a lot of things out there that could show that we'll have better rates. One for the stock market correction, which we're waiting any time for that to happen. Another item to note is Bank of Japan really wants to weaken their currency, the yen, and one way to weaken that to the U.S. dollar is by acquiring more and more mortgage-backed securities, buying our debt from us, and that's one of the things that China has been accused of with their currency manipulation, is by buying a lot of our debt here, and that's one way they can do it as well. So we may see Japan coming in and buying more of our mortgage-backed securities to reduce the value of the yen to the dollar. So that would be obviously good for the interest rates, because if there's more demand, that means interest rates come down. So right now we have a little bit better pricing than what we had yesterday close, about in the middle of the day here, but better pricing. All right, folks, you guys have a wonderful day. We've got one more day left, and see you guys tomorrow. Thanks for watching.